All right, today we're putting stock WY right under the microscope. We're going to do a full technical diagnosis, looking at all the evidence piece by piece to really understand what's going on with it. Let's dive in. So, what is the real story here? You look at a chart, you see the numbers, but what's actually happening underneath? Is this a hidden gem, or is there some serious trouble brewing? We're going to find out. You know what? Let's not bury the lead. The final verdict, after looking at everything, is a crystal clear avoid strong sell signal. That's a pretty heavy call. So the real question now is, how did we get here? What's the evidence? So yeah, the verdict is in. But a verdict is only as good as the evidence that backs it up, right? So for the next few minutes, we're going to walk through exactly what the charts and the data are telling us that leads to such a strong conclusion. First things first, you always have to zoom out. Before getting lost in the daily noise, we need to understand the big picture. What is the long-term story for this stock? And, well, there's really no other way to put it. The stock is officially in a bear market. And that's not just a rough couple of days. We're talking about a sustained downtrend where the sellers are completely in the driver's seat. And this right here really paints the picture. The current price is way down at $21.69, but its long-term average, its 200-day moving average, is all the way up at $25.74. That's a huge gap. It's like the stock's running a race with a giant weight tied to its ankle. And if you need more perspective on just how weak this is, look at this number, 4.63%. That's its position in its 52-week range. It's trading in the bottom 5% of where it's been all year long. It is literally scraping the bottom of the barrel right now. Okay, let's move on to the next piece of evidence. Now, at first glance, you might see a recent price gain and think things are turning around. But when you look at the volume, the money behind the move, it tells a very different and kind of suspicious story. So yeah, the stock popped up a little over 1% recently. And someone new to this might go, hey, a green day, maybe that was the bottom. But in a downtrend like this, you have to be skeptical. You have to ask, is there any real conviction behind that move? And that leads us to this classic technical term, the dead cat bounce. I know it's a grim name, but it perfectly captures the idea. A small, brief jump in price that gives false hope before the stock continues its slide downwards. It's a classic trap. And here's the smoking gun. While the price went up a little, the underlying money flow was actually negative. Think about that. More money was leaving the stock than coming in. That is a massive red flag. It suggests there's no real buying power there, and it fits the profile of a dead cat bounce to a T. All right, now we're going to peel back another layer. We've looked at the big trend, we've looked at price and volume. Now let's check out the dashboard of technical indicators and see what the deeper signals are telling us. Let's start with momentum, which is kind of like the stock's engine power. And right now, there's just no gas in the tank. Short term, it's weak, struggling to get above even its most recent averages. And long term, well, we already know that's bearish, with the price stuck so far below that critical 200-day line. And this dashboard just confirms everything. Look, the RSI, a key momentum indicator, is flashing a weak, bearish signal. The MACD, which tells us about the trend's strength, is negative. The absolute best signal on here is neutral, and neutral doesn't do you any good when the tide is pulling you out to sea. And just in case you were hoping for a quick turnaround, the short-term forecast is also pointing to a high chance of a weak or even negative start to the very next day of trading. So, no immediate relief in sight. So, after all that, with all this evidence stacked up, what happens next? Where could this stock possibly go from here? Let's map out the key levels you've absolutely got to watch. Okay, this is the battleground. The price is at $21.69. The floor, or what we call crucial support, is down at $21.42. That's the last line of defense for the bulls. The ceiling, or key resistance, is up at $22.01. The stock is basically trapped between these two levels. And that sets up two very clear paths. For the bulls to have any shot to show any sign of life, the stock has to break up through that ceiling around $22. But if it breaks down below that floor at $21.42, that could open the floodgates to another wave of selling and push the stock to brand new lows. Which brings us right back to where we started. After digging through the trend, the volume, the shady price action, and the indicators, the conclusion is just stark. There are simply no signs of a reversal yet. The The bears are in complete control. So I'll leave you with this to think about. We've seen all the red flags, but what would a real recovery even look like? If you had to pick just one signal, whether it's breaking a price level, a huge surge in volume, or one of those indicators flipping green, what would be the one thing that would have to change to make you believe this bearish trend is finally turning around?